Now, we're seeing your stock price go up by about 1% today, but the market seemed disappointed over the high level of provisions coming out in the fourth quarter. In fact, we saw that you provisioned about 7 billion naira in the first 9 months of 2011, and then in the next 3 months doubled it to about 17 billion naira. What is the cause for this?
The cause is very obvious. During the last quarter of the financial year, that is the time that you actually make provisions open in terms of general provisioning. If you look at the numbers, the difference is purely about 10.2 billion out of that provision figure is general provisioning. The other, there's a 5 billion haircut on AMCON assets. And if you look at it, the extra is very negligible. It's just between 1.8 and 2 billion on a balance sheet size of over 832 billion. What we're trying to say here is that it's been a tradition in Zenith Bank to cover our loan NPL by over 100% in the past years, except in 2009 that there was a special audit. So we are going back to that, our policy that we must cover our NPL by at least 100%. That's why we're a little bit bullish in making general provisioning. And I want to also say here that it's just a general provision. Once we revert to IFRS this year, we can revert the general provisioning.
Now, we know this general provisioning is much higher than what the regulator requires, actually. And we're seeing you giving a large security buffer to grow your loan book in 2012. So what is the outlook for your loan book in 2012?
I so much appreciate that you know that it's a buffer for 2012. And you also mentioned about the regulatory provision of, the regulation says minimum of 1%. So even if you want to make 10%, the law allows you. The law only says make a minimum of 1% general provisioning. And as you rightly say, this gives us room to really grow in 2012. We can grow our loan book because we have enough buffer to actually do that.
Now, we also saw strong loan growth. We saw gross loans up about 23%. You seem to be more aggressive about giving out credit. We know that Zenith's preference is usually in the large corporates, oil and gas sector. Now, given what happened with Zenon Oil, is this likely to change?
Well, I would not like to be customer specific. If you also do like a trend analysis, which market do we play? We play basically in the AAA rated large corporates. And if you also look at the economy is growing. So definitely, as the economy is growing, demand for working capital will also grow. So we need to also fill that gap in the demand for working capital. That's why our loan growth will also grow in line with the economy.
Now, I'm curious, I mean, on a price to earnings basis, we've seen your stock price seemingly cheaper than your peers in the top tier banks. What are your thoughts on how the market is pricing your stock?
Well, you see, there's what we call an interplay of the market forces. And at this point in time, there are times there could be distortions. I think there's a distortion in our market price because the value we are holding as a bank is not reflected in our market price. And I also believe that the market will adjust immediately because if you look at our balance sheet, we have one of the strongest balance sheets you can think of in the industry. Our balance sheet is strong, and after the meltdown and also the special exercise, audit exercise by Central Bank in 2009, you could see that we come out strong. Take all the parameters, look at all the ratios. This will show that this is a bank that is moving into the future with a very strong balance sheet. So we have a whole lot of hidden values that are yet to be adjusted by our price. So we believe that will be adjusted in time. It's a marathon race, that's our belief.
Now, a question that is on the lips of a lot of analysts is, what is the target risk charge as a percentage of gross loans in 2012?
It can only get better. Our risk charge this year, I know you're saying is quite high, and I've explained that it's mainly because of the general provisioning, which is about 10.2 billion out of the 17 that you're discussing. And we also did not expect AMCON to be that tough in the last quarter. We were working on the principle of what happened during the first two takeovers by AMCON, but they became a little bit tougher, and we didn't have control over that. But we really had collateral that we thought would cover those assets. So going into 2012, we believe we have enough buffer. Our risk in this year should actually be much lower. The risk charge should definitely be lower because, I mean, we believe we have all the parameters that will suggest that.
Well, thank you very much, Mr. Udom, for giving us